I'm entirely confident.
Yeah.
It's not a question of double counting. We have known for decades that gold has been stripped out of Western capital markets and gone into China, which, as I've written in my recent article, I mean, China is like Hotel California for gold. I mean, it can go in, but it can't get out. So that is the reality of it. And of course, the Chinese authorities brought in regulations in 1983, appointing the People's Bank of China with sole responsibility for managing the national gold and silver reserves. And we don't know how much they tucked away. I mean, I quoted Article 3 in those regulations, which basically states that, gold and silver acquired by the PBOC as dealer in these, as exclusive dealer in these metals, could be tucked around various state organizations like the army, the youth movement, and so on and so forth. So, and indeed, I have been given anecdotal evidence that there are substantial quantities of gold held by the People's Liberation Army, for example. Yeah. So this is something which I don't think is necessarily new, but what we don't know is the exact quantities that the state accumulated. But what we do know is that at the same time, the state ramped up gold mine production so that from 2007, it overtook South Africa as the largest nation by gold mine output and has retained that position ever since, typically producing anything between 350 and 450 tons a year. I mean, it has been declining a bit recently, but they are still the largest nation by mine production. Couple that with, the Hotel California bit, you can see that there is a huge emphasis on ensuring that the state has sufficient gold to cover its currency liabilities at some stage in the future. And it was only in 2002 that the citizens were then allowed to buy gold. And they set up, the People's Bank of China set up the Shanghai Gold Exchange, which it controls to this day, as the mechanism for delivering gold, physical gold, to the public. And since then, the gross value of the gross amount of gold delivered into the public has been in the order of about 28,000 tons. That's quite a lot of gold. And on top of that, of course, you've got the banks who offer gold accumulation accounts to their deposit customers. And for as little as 500 yuan, which is about $75, you can open a gold accumulation account and instruct your bank to transfer every month an amount like, say, 100 yuan into your gold accumulation account. Where else are you going to save? And household savings there are accumulating at the rate of over $5 trillion equivalent every year. I mean, we're talking not trivial amounts. So I think in a sense, while, China has been very much in the headlines in terms of acquiring gold and so on, and nobody quite knows how much, nobody quite knows how to analyze it. I think the problem has, in terms of gold liquidity, physical gold liquidity is probably only just starting. It ran up, much to the embarrassment, I think, of the American government and also perhaps the European governments who are fully on side with America in terms of, we look to the dollar, if you like, as the replacement value for our currencies rather than gold. I wouldn't rule out that there was some sort of push, if you like, to try and get it lower. And of course, the other thing is that if you look at the position on COMEX and in London, particularly in silver, you ended up with a huge, great squeeze. I mean, the silver lease rate jumped up to 40%, I think, on the 9th or 10th of October last year. Gold has got a lot more liquidity. That's not quite so bad. But if you really want to buy large amounts of gold, you go to one of the Swiss refineries and they say, back of the queue. There's one point worth making, and that is that central bankers around the world actually do understand the distinction between gold as money, final settlement, no counterparty risk, and fiat currencies. And guess what? They've been piling over themselves trying to buy physical gold and sell fiat currencies. And when you look at what the People's Bank of China has been doing, you would think they've been buying gold. That's actually the wrong way to describe it. What they're doing is they're selling fiat currency. I mean, they do, because that's where the portfolio flows are. I mean, they're very much in the Western markets. But, I mean, I've just seen a tweet, which I can't verify, but it's sort of fairly reputable source, I believe, saying that in the last month, China's imports of silver is at a record. You know, I mean, what we're seeing is not so much arbitrage. We're just seeing Western markets being drained. And then there was, I think it was last month, they were saying that, you know, if it wasn't for the exports of gold out of America, I mean, they basically covered the trade deficit. I think that's a silly way of looking at it. That's the way that you know, the Indian government looks at it as well. You know, they don't like to see gold coming in because it screws up the trade figures. But, you know, nonetheless, I mean, the gold and silver are still migrating from west to east, and the quantities are not diminishing. You know, the rate has been, the gold-silver exchange ratio has been rising. I mean, but bear in mind that it's fallen from a high of 120 down to current levels, which are 60 and change or something. It should be on its way to below 20 if silver is actually to be regarded as money. Now, the problem we have here is that in certain parts of the world, silver is still regarded as money, particularly in China. And also, I mean, I remember, you know, going around the Gulf when I was about, I don't know, sort of 19, 20, in the late 1960s, and Maria Theresa silver dollars were still being used in Arab nations. They trusted that money rather than paper money. So, you know, I mean, the idea that silver is money is something that is not too far back in history as far as the entire Asian continent is concerned. But against that, of course, industrial use has expanded very, very rapidly. And it has become so important, not just for photovoltaics, but also virtually all electronic and defense applications. It is a vital metal being the best conductor of all the metals and having its own specific properties. So much so that America has turned around and said, finally, this is a critical mineral. The problem, I think, for Western capital markets is there's such a lack of liquidity in silver that it can get squeezed up very, very quickly. But equally, when the heat comes off, my God, they can bang it. And if there is anyone who is stupid enough to speculate in such a volatile situation, they get margined out. And so that basically, I think, is what happened, which took silver down from 120 down to, 60 or something, more or less, in a matter of a few trading sessions. So the volatility, if you like, is because of our system, not because there's some sort of huge fundamental change in the demand for silver. That demand is still there and growing. And China is no longer providing us with that excess liquidity or the marginal liquidity to put a lid on prices.
Russia has been in one and now two proxy. Well, Russia's been in one direct war with the Ukraine and now a proxy war in the Middle East. So that's what gold is for. It is to protect your purchasing power and your savings. And you might recall that it was gold after basically the U.S. shut Russia out of the global financial system that ran to gold. So it's doing exactly what it's supposed to do. And for me personally, this that I'm holding in my hand, this is my emergency savings.
Right.
So, you know, I have this for growth and other things, but this little raw ounce of gold, this is my emergency savings. I had run a business. If I needed to come up with cash and let's say they shut my bank accounts down, God forbid, poi. But what they did with Russia, you know, they shut those bank accounts. I still have money, right?
Yeah.
So that's when I see what's happening in the Middle East with all the geopolitical turmoil and I see the lines changing. And the other part that people should keep in mind if we're talking about central banks, do you really think that it's their job to tell you honestly how much gold and silver they have, or if any silver at all, and what they're really doing with it. If you go back and you look at the design of that whole system, it was designed to create this paper market and eliminate the demand for physical, or at least, reduce it really down. So it's all a major manipulation. And when there will be, I don't know that it'll be next week, it could be though, when they cannot deliver on those contracts, what they've done in the past is they've just paid a premium in terms of fiat